Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, January 26, 2018, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen. Volatile action, whipsaw action, a roller coaster ride for the dollar and the precious metals, with gold closing off of new highs reached this week, trading to 1348.70. That's basis February's futures contract, puts it down about $14 on the day. Silver down 22 cents at 17.39, and that is all in light of a lower U.S. dollar today, down 39 points at 88.88. Those closing prices in terms of changes in the precious metals are not truly reflective, because spot gold itself actually closed up about $2 on the day. New all-time record closes in the Dow Jones Industrial Average, Standard & Poor's, and the NASDAQ, with the Dow breaching 26,000 this week, closing at 26,616. That's a gain of 224 points. NASDAQ up 94 points to close at 75.05, and the Standard & Poor's closing at 28.72. That's a 33-point gain. As far as Bitcoin futures go, they close just below 11,000, 10,960 when we look at the CBOE, and 10,925 when we look at the CME. Without a question, this week presented one of the more interesting weeks I have seen in both gold, silver, as well as the dollar in quite some time. On Wednesday, statements by Treasury Secretary Stephen Mnuchin basically took this market up about $22. At the same time, we saw the dollar fall by about 1%. That was Wednesday. Then yesterday, we had President Trump in an interview with CNBC talking about the fact that he wanted a stronger dollar, which of course is in contradiction to earlier statements that he made, and that really caused the U.S. dollar to bounce to the upside and gold to trade lower, as you can see on this daily chart. Today, and we are looking at spot gold, we'll switch over to the futures in a second, but today we had gold up slightly, up about $2 on the close, closing at $13.50 per ounce. All in all, it was a rather good week for gold, and we can see that quite easily when we convert our daily into a weekly chart, and it is quite evident that we had a substantial gain on the week. That's that single candle here, although we did close well off of the highs achieved earlier in the week on Wednesday. And traders, interestingly enough, when we look at the dollar itself, this being a daily chart of the dollar index, we can see that yesterday's statement by President Trump did cause a upside pop in the market, but more a one and done scenario, in that in today's trading activity, we did see the U.S. dollar once again trade under pressure, closing at 88.90. More so when we convert our daily into a weekly chart, and let's go ahead and compress that so we can look at the long-term study that I have up, which is simply a Fibonacci retracement. And the retracement that we're putting in here is quite a long one. It starts October 2013, which is when the dollar index was at 79. It concludes up at the top end of the range, which is October of 2016, when the U.S. dollar index was just shy of 104. And of course, we get our various levels. We talked about some very critical points in which, if the market would break, we could see a rather hefty move to the downside. And the first area we looked at, of course, is the 91 area, which is a 50% retracement, and then 88.58. That's our next critical area, which, by the way, is the area that we are currently at. Once this market began to drop, it dropped over an extended period of time, pretty much throughout 2017. We had a slight pop to the upside, and then this final drop here, which takes us really to this week's activity, in which we have now challenged these lows here at 88.58. As you can see, the market closed at 88.90, so just above that. And my belief is that If the market cannot hold this area, in other words, if it breaks on a closing basis through this particular price point, we will probably see the dollar go into a virtual free fall, because on a technical basis, we don't get any real support in the market till about 85 on the dollar index, 84.49 to be exact, and that is the 78% retracement of the dollar index using this rather long retracement. And traders, it was exactly the weak U.S. dollar that caused gold prices to dramatically trade higher throughout the week, and really has been part and parcel of this tremendous rally that began middle of December when the market was trading at 1238 up to these most recent highs, which are the all-time highs of the year and have absolutely taken out the highs of last year. Now, interestingly enough, on a closing basis, when we consider the last time the market really tracked in this area, which we have to go back to September of last year, we can see that the highest close that the market had was roughly $1,350. Now, although we had a higher high on a closing basis this year, we can see that the market closed at $1,350, putting it down about $13 on the day. We certainly see the potential for some resistance in this area, as effectively we have a double top. However, that did not stop us from pulling profits when earlier this week we sent out a special trade alert as this market moved up, and we pulled profits on our long trade. To go over our most recent trade, we went long February gold when the market was trading roughly at 1265. We put in a series of stops and effectively trailed our stops up as this rally continued into this week. And as it hit this apex at around 1360, we sent out a trade alert to cover the long February position and effectively pull profits. We also recommended that we roll the position over to an April contract, and we'll talk about that in 1 second. We got in at 1265. We got out at 1358. We pulled a total of $93 profit, which is $9,300 per contract, or approximately a 90% return on the first trade of this year. Which brings us to the second part of the trade, in which we effectively rolled over the February position into an April position. So as we went and pulled profits and sold February gold, we simultaneously bought April gold. Now, this is Wednesday's candle right here, and effectively we went long April gold at 1363. Yesterday, we had an interview by President Donald Trump in which he said he believes that the dollar is going to get stronger and stronger. We saw that one-day wonder or one-day bounce in the dollar, and that caused the market to really gyrate. It continues to do so today, and in fact, as far as April gold is concerned, that closed at 1353.80, putting it down about $14 on the day, or $14 from the high. Effectively, we put our stop below these lows at 1345. The low that day was 46. The low today was 1348. So we do have a stop at 1345. We are long April gold at 1363. The real question I have is, will the market be able to immediately take out this current level of resistance, which of course is a double top of sorts, or will we see some sort of movement down, some sort of retracement from this long rally before returning to rally mode? We'll have to wait till next week to see. But we did pull a nice profit in the market, and if in fact we do get stopped out of this trade, are limiting our risk factor to about $20 on the trade. And traders, we also saw extremely wild gyrations in silver, given that on Wednesday of this week, and this is that long green candle, when we saw gold trade up about $22, which was just under a 2% gain, silver not only popped to higher pricing, but moved up about 4% on the day. Again, that was short-lived as we saw a little spike up on Thursday, and today's move put silver down 22 cents on the day at $17.39. My current take on silver is I am not a buyer unless silver breaks above on a closing basis the price point of $17.56 in terms of support. I believe there should still be solid support at about $17.10. This week was also a tremendously huge week for U.S. equities, with the S&P, the Dow Jones Industrial, and the NASDAQ all moving to new record highs. We are looking at a daily chart of the Dow Jones Industrial Average. Today's close taking it 223 points higher to effectively close above 26,000 at 26,616 points. When we take a look at the recent activity, we can see that not only is this market continuing to move higher, but the tack, meaning the actual angle or slope of the upside move, has definitely gotten steeper, as you can see by virtue of trading activity over the last couple of weeks. Really, since the beginning of 2018, we saw a dramatic change or shift once President Trump implemented some tax reforms, and that has definitely taken this market to new all-time highs. I would look for that to continue throughout the next week and probably for the next month. The NASDAQ also closed at new record territory, 7,500 on the composite index, up about 89 points on the day. We can absolutely see on this daily chart how we've exceeded any previous highs that have come into the market. And traders, take a look at the Standard & Poor's 500, a tremendous spike in trading activity today. After a couple of lower closes on Thursday and Wednesday, a 33-point gain, a 1.18% gain, closing at 28.72. And as I said, I am looking for higher pricing in U.S. equities over the next month or so. And traders, lastly, I do want to take a look at Bitcoin futures. And as you can see, we have now seen the market move into a kind of a sideways trading pattern after being under considerable pressure, considering that this market opened at about 15,000, quickly rose to above 20, then just as fast dropped to just below 12,000 before trying to find some sort of footing, and then sold off and broke below 10,000 for a short period of time, actually trading to 9,050. We can see that it has not been able to really track much higher and is attempting to find some sort of a base just at about 10,000, with the Bitcoin futures closing at 10,960, call it 11,000. And traders, as far as Bitcoin futures pricing goes, I do believe that we are at a critical area at 10,000. If we can see Bitcoin futures as well as cash hold this price point over the next couple of weeks, we could see Bitcoin return to rally mode and move higher. However, if it breaks below $10,000 on a closing basis, all bets are off. Traders, we certainly saw a flip-flop scenario with statements made by President Trump in which he took a 180-degree turn from his statements earlier about wanting a weaker U.S. dollar. He said he wants a stronger U.S. dollar now. The fact of the matter is the dollar is going to go where it needs to go, where market sentiment pulls it, and that move that we saw on Thursday following his statement was simply a one-day wonder, with the dollar once again moving to lower territory. The dollar is at a critical point, and depending on how it opens next week will determine as to whether or not gold and silver hit some sort of a short-term top and will have a small retracement or barrel through current pricing to move to new highs, specifically gold to $1,400 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update and review. Bye-bye.